Hello guys, it's Stock Trader Max here from Daily Market Movements, and welcome to another video where today we are going to be analysing the market. Just to get started with today's video, I think we should start it off with a macro note today in terms of economic data. We did have some core retail sales which actually come in slightly better than expected, up 0.1% versus the minus 0.2%. So this is quite positive. It shows that the consumer is still intact, and I think that's key. Moving into the next couple of months, especially October when earnings season kicks off again, investors are going to soon shift their focus from the interest rate cut that's expected to come tomorrow. Is it going to be 25 basis points or is it going to be 50 basis points to now earnings? You'll probably get this from Thursday onwards. So it's very important that the consumer continues to be strong here, and that gives a better chance of companies forecasting stronger growth going forward, as they give the forward guidance, of course, in October's earnings season. But very welcoming to see the 0.1% versus the minus 0.2% expected. And then lastly, guys, just quickly looking at the CME activity here. This is for the interest rate cut tomorrow. Now, the majority are pricing in a 50 basis point cut, at 65% chance of that happening versus the 35% chance of a 25 basis point cut. I must admit, I'm personally in this camp here. I do still believe that we're going to get a 25 basis point cut. There are still a few hawks within the Federal Reserve, and I just don't really see 50 basis points cut being their first move. I don't think that the market needs a 50 basis point cut at present. I think that we can afford to cut it at 0.25 basis points per meeting for the next couple of meetings as we go into the start of 2025. But that's just my own humble opinion. Before we look at the charts, guys, just a real quick one. Anyone who's wanting to join my Signal team, then make sure you visit my website, dailymarketmovements.com, and you can sign up for a very small fee of $29.99. You basically get access to the trades that I have open, and of course I update you via Telegram whenever I open a new trade, for example, or close a existing trade, or just modify it. And I do have some very exciting news. I have educational content getting uploaded later on this week. But let's get started here with the S&P 500. S&P 500 currently trading at 5,659. And in the previous videos, I've been talking about this wedge pattern, this triangle wedge pattern that we've been trading in, pretty much dating back to the all-time high that we formed back on the 16th of July. Good news is that we're actually breaking out here. We are testing the upside. And in fact, we've actually broken above the swing high that we formed back on the 2nd of September. So we are attempting to break out here. Whether this positivity can last, I'm not entirely sure. Obviously, the US markets have just opened, so it's an encouraging start. But as we do go into the FOMC meeting, I do have mixed emotions. I'm fearful that we might have a sell on the news type of event play out, especially if we get the 0.25 basis point cut, where some are expecting the 50 basis point cut, for example. But on the flip side, I do believe that we're about to enter into a period where we are going to see massive market rotation. It's been a very narrow uptrend over the past 18 months, where it's just been a handful of stocks that have allowed the broad indices to trade this high, such as Nvidia, Apple, just the usual suspects, the mega cap stocks. And I do believe that from tomorrow onwards, we are going to see the mega cap stocks start to lag the broader market, meaning that a lot of the money now, a lot of the $6.5 trillion that sat on the sideline is going to start to get invested into the small caps, the mid caps, and the undervalued large cap stocks like PayPal, for example. So I am pretty excited for the medium to longer term, but I am slightly cautious going into tomorrow's interest rate cut. But the S&P 500 is showing some promising signs here. Hopefully we can continue this breakout. But the fact that we've broken above the swing high here is very, very positive, and it does now make me believe that what we have seen was an ABC correction that was similar to this and not a larger correction, if that makes sense. So A, B, C, and now we're just currently, maybe this is the first wave, second, and now we're about to see, we might be in the early innings of the third wave. So that would be very encouraging if that was to be the case. There we go, 1, 2, and perhaps we go up to 3, 4, 5, and we might have something that looks a little bit like that for for example, but obviously time will tell. Okay, moving on to the Nasdaq 100. Nasdaq 100, very similar to the S&P 500. We're breaking out of this triangle wedge pattern. We've seen a lot of strength in technology stocks. We've seen stocks like Nvidia rebound very nicely. Stocks like Microsoft today, they've announced a 11% increase in their dividend, as well as a $10 billion buyback. So obviously that's it's going down very well with their investors, and that stock's up rather nicely today, up around 2%. So we're seeing a nice surge in the Nasdaq 100, and again, like the S&P 500, it would be really nice to see whether we can break above this swing high here. That's very important, because at present, that B still, the ABC, where we could have the C all the way down at around 16,000, that could potentially still play out. But the fact that the S&P 500 has managed to break above the swing high does give me lots of confidence that we can continue to see the same happen here in the Nasdaq 100. Moving over to the Dow Jones 30, the Dow Jones continues to create a brand new high of 41,686. So this is a new all-time high for the Dow Jones 30 created during today's trading session. Some financials giving and offering a lot of strength here for the Dow Jones 30. And then finally, guys, just going over to Bitcoin. Bitcoin regained 59,000, although it's just dipped below it by about 50 points, let's say. But this is very encouraging. We have the 50 and 200-day EMA that sit just at around that 59,000 to 60,000 level. If we can get a break back above there and a break above the swing high that we formed on Sunday evening at around 60,500, that's going to be very positive for this market going forward. And I do like the setup for Bitcoin as well as gold and silver as we start to go into this cutting cycle. I do believe that a lot of the 6.5 trillion that's sat in market funds right now can find its way into the Bitcoin market. And as I mentioned, guys, I myself and my Signal team do have a lot of money invested in Bitcoin and Bitcoin proxies, as I do believe that market's going to outperform as we go into the next 13 months. But that's going to wrap it up for today's video. Thank you very much for tuning in. I will be back tomorrow giving you all an update, of course, after we get the Fed's interest rate cut decision. Is it going to be 25 basis points? Is it going to be 50? We will soon find out. But if you would like to join my Signal team, guys, don't forget dailymarketmovements.com is where you can join. Thank you.